All right, so let's talk about share buybacks and dividends. These are the activities that go with day 18. If you're in the evening class, it was the beginning of class 9. So 2 topics, share buybacks and dividends. You need both of these for your project assignment. So to start things out, there in the Nearpod, there was a link to an article about stock buybacks that, as you have a minute, look over the article. I'm not going to put it up here to read. Then there's another article. We'd spend a little bit of time in class kind of glancing through an article about kind of the mechanics of how share buybacks work or stock buybacks. So again, you can see that in the Nearpod activity that's posted. All right, so the next thing I ask you, this next activity, I ask you to draw a picture that showed the relationship between authorized, issued, and outstanding shares. So I'm going to show you what my picture looks like. I'm going to start here. Great big picture. I want it to be filled in. So in my big picture, this is my representation of the authorized shares. Okay, so when a company first goes to incorporate with the state, they say we want to have this many shares authorized. It's kind of the universe of their shares, if you will, for the company. You set the number very, very large so that you will always have room to issue more shares if you want to, right? So these are authorized. This is what the state has said you could use in the future. All right, and so then this is going to be my issued shares. And I want to make that red on the inside. There we go. All right. Now, so this is my issued shares. So what happens with the issued shares, right? You go to market and you say, I'm going to issue shares, going to sell shares to people outside of the company. And so that is the issued shares, and you can see it's a subset of the authorized shares, right? It's not all of the authorized shares. It could be ultimately, but usually not. But usually we're going to leave enough room so that the authorized shares we have lots of flexibility. So that's my issued and authorized shares. All right, the last category of shares that I wanted you to think about is the outstanding shares. So the outstanding shares, as you can tell from my picture, they're a subset of the issued shares. And they are always equal to or less than the issued shares. You can tell by my picture, right? The difference between issued and outstanding shares is our topic for the evening, or our starting point, and that is Treasury. Whoops, I spelled it Treasury. Treasury stock. Okay, so when we buy our own shares, they come back into the company and they reduce the outstanding shares. Those shares are still issued. They're just floating down here in Treasury stock. All right, and so the difference between issued and outstanding is this Treasury share piece that we brought back into the company. So the treasury share, when they're brought back into the company, and I use the example in class of sticking them in a drawer, they are not part of our earnings per share calculation. They are not part of our, if we do dividends, we don't give dividends to ourselves. So the treasury stock doesn't get dividends. It's outstanding. So you'll see on the balance sheet both the issued shares and the outstanding shares. And you can tell if there's a difference there, it's because of treasury stock the company's holding. All right, there you go. That's a visual for you. Okay, so we have an activity that we started with. This first activity covers a lot of ground. It's on treasury shares. It's actually the accounting for treasury stock using the cost method. So we are going to look at this series of transactions, and we'll work our way through this activity. We did this in class. I'm going to make it small so that I can make entries to the side, and you can follow me. You, of course, have already tried yours. You just wanted some verification that you're doing it right, I know. All right, so the first entry said what we said was prepare the entry to show the issuance of the shares. So my entry number 1 is going to be the one from last class, so you know this. This is cash going up by $500,000, and common stock went up by the par value per share, which was $1 times 50,000 shares. And then we had that additional paid-in capital common which would be the balance of that entry, so $450,000. Oh, that is just not really written very well. There you go. Slow down a little bit, get it written a little bit better. Okay, so that was the entry to issue shares originally. Number 2 is basically asking you, when we buy back shares to hold as treasury, is that going to increase, decrease, or not change our owner's equity overall? If you were to look at the balance sheet that you have already started for your project, you would be able to answer this question. What you would find is that you have all these equity accounts that have a credit balance, and your treasury stock has a debit balance. And so you know when you combine those, that treasury stock is decreasing owner's equity. Okay, so every time I buy more of my own stock, repurchase more of my own stock, I'm making my owner's equity smaller and smaller. All right, question number 3. We're going to use the cost method to record treasury shares, and basically that means, just as it says here, that we are going to not worry about the par value. We're just going to use that cost as a cost basis for the shares, right? So this next entry is to record that first repurchase of 3,000 shares at $55 a share. You know, I always say if you're going to do the journal entries, if you can do the cash part, that's always the easiest, right? So I'm going to do the math. I figured out that I'm buying 3,000 shares, and I'm paid $55 each, so that is a total of $165,000. And see, I'm talking and not paying attention. I definitely would not have. There we go. I paid out cash. Hello. Here I'm saying do the easy thing, and then I did it wrong. Classic. Okay. Paid out $165,000. I'm going to debit Treasury stock for $165,000 because that's what we paid for the stock. $55 times 3,000 shares. Okay. So you notice this entry does not have anything about par value or common stock. We don't affect our common stock account. We buy these shares back and we put them in an account called Treasury stock. All right. So then I ask you, in what account we're going to reissue shares? Is there going to be a gain or a loss on the income statement? And I had you think about this in class for a while, and I told you the answer there is no. There's no gain or loss. No gain or loss. Okay, essentially what I'm saying is we can't buy back and trade our own shares to affect our income. If we could, people would imagine what would happen. Managers would buy their own shares to sit on them for a quarter when they needed more income, and then if they could sell them for a gain, they would sell them, and it would look like they'd made money when in fact they're just buying and selling their own shares. Okay, so there's no gain or loss when we buy back our own shares. All right, I'm going to jump down here. Number 5, what would going to be the reissuance of 1,000 shares for $75? And then I have this little comment to remember you have recorded those at cost that we had at number 3, which was the $55. All right, so now we're going to issue them 1,000 shares for $75. The cash is easy, $75,000. I'm reissuing Treasury stock, so Treasury stock needs to be credited. That makes it smaller. Okay, that's my credit. I recorded them at $55 originally, and so that is the same value I'm going to use for this 1,000 shares. So 1,000 times $55 is $55,000. My journal entry doesn't balance. I'm going to use an account. Oh, we skipped that question. We're going to use an account called Paid in Capital Share Repurchase. Maybe I skipped that question. But there it is for the difference. So that's $20,000 at this point. Okay. Oh, no, that was the question. Yeah. Share repurchase. So this is 5 and 6, I guess. We did at the same time. Share repurchase is another equity account. Permanent account in the equity section. All right, so move all this up a little bit. Okay. So now we're going to look at this reissuance of those other, not remaining, but 500 more shares. And we did those at $30 each. And so $30 times 500 is going to give me $15,000 in cash. And again, I'm going to get rid of the Treasury stock at that $55 level. So it was $55 times 500, which if you do that math, you get $27,500. And now I need to make this journal entry balance with another debit, and I'm going to use that same Paid in Capital Share Repurchase account. Okay, it's the same account here and here to make that happen. Okay, so now I've done those journal entries, done that journal entry. A couple of things we talked about, the fact that this share repurchase account, it cannot have a debit balance. So you probably want to make yourself a note of that. No debit balance for the share repurchase account. Question 8 is basically asking you to add up the authorized shares and the issued shares and the outstanding shares. This up a little bit so I can write. All right. Yeah, that says outstanding. All right, so how many of each of those categories? So if you look back at the information, you can see right here 100,000 shares were authorized. That really isn't going to ever change, so the answer is 100,000 shares authorized. How many shares have been issued? Whoops. You're going to look and say, okay, up in here at the very top, we issued 50,000 shares were issued. Okay, that's another thing to take note of. The issued shares isn't going to change unless you retire shares, which we have not done. We've bought some shares back. That is not the same as retiring them. So we have 50,000 shares issued. Oh, gosh. That hardly looks like even saying 50. And then our outstanding shares is where we consider the Treasury stock shares. All right, so outstanding shares would be the same as issued if we didn't have any Treasury stock. So what we need to figure out is how many Treasury shares we have. So if you look back at the problem, we originally reacquired 3,000. I'm just going to put this little math over here to the side. We had 3,000 that we repurchased. That's my abbreviation for repurchase. Then we reissued 1,000, and then we reissued 500 more. And so that means we have 1,500 Treasury shares. Okay, so we have 1,500 in Treasury. The only difference, like I had in my picture, between issued and outstanding is the number of Treasury shares. So that is some simple subtraction. So here we know we have 48,500 shares. If I took those 48,000 plus that, I would get the issue number, right? Okay, there we go. You want to know how to do all these journal entries. Pretty comprehensive there. Okay, so then there's some quiz questions about the value that you recorded, and it's this one. You did not do anything with par value, so it's not answer. Then when he said when the shares were reissued, what did your journal entry look like? This was the journal entry we just recorded for the $30. We have a question about the paid-in capital share repurchase account. It's a true or false question. Can carry a credit or a debit balance? And he would say false. It can only carry a credit balance. Any excess debits would go to retained earnings. Good answer. All right, this next activity just had to do with the balance sheet presentation of Treasury stock. And so this is what the balance sheet looked like before we made our Treasury stock entries. If you look back at the entries we just made, you would notice that none of them affected any of these existing accounts. The only thing that changed is we added a Treasury stock account. So we'd squeeze that into the balance sheet. And we added our paid-in capital share repurchase account. Okay? Our Treasury stock, if you go back through all of the entries and look at the T account, I believe it has 82,500. Let's look real quick and see. Get out of the way there. started at 165. We reissued 55,000. Then we reissued 27,500. So if we do the math, we're going to end up at 82,500. I believe. Yes, makes sense because we bought 3,000 and reissued 1,500, so we should be half of our balance. All right, so that's 82,500 for Treasury stock, and we're making sure we realize that that shows up in this equity section as a negative. And then our paid-in capital share repurchase, we had the first entry credited for 20, the second entry debited it for 12,500, so it has a balance of 7,500. And that's basically what would happen on the balance sheet. Okay, so that's the answer to number 1. It's right there. Number 2, the normal balance for Treasury shares. You know what normal balance means. Is it a debit or a credit? And you would say it's a debit. We wouldn't see a credit balance in Treasury shares. Did the purchase and reissue of common stock change your Treasury stock? Did it change our common stock balance at all? This is an important thing to make sure you are aware of. The answer is no. We didn't do any journal entries that impacted that common stock after we issued it. Okay, and then the last question is just this idea. Sometimes we come across a balance sheet and you'll see something called accumulated deficit. So this was just kind of a little bonus information, I guess. What that means is that companies lost money since its inception if you see an accumulated deficit instead of retained earnings. All right, we're moving on to this now. Quiz questions we just answered. Here was our